Hello and welcome to another ACY Securities Market Update. My name is Alistair Schultz and I'm going to be your host through today's trading journey. Now what I have on offer for you today is an update about the Australian GDP figures that were released this afternoon. We saw a rise of about 0.5% from 0.4%, so it's only a little fraction of a move up, but nonetheless it's at a time where we wouldn't usually consider it. And now the reason for this is actually that the data has come from the previous quarter, not the quarter that we're in right now. So it hasn't encapsulated the coronavirus, and it most certainly hasn't entirely encapsulated the Australian bushfires that we saw late last year and into the beginning of this year. So it hasn't really given us an idea on all the damage that's been done from that perspective. Now, moving on from that sort of aspect, I also want to just iterate through this chart here what I've been looking at myself. Now, the Australian dollar has been on a decline for an extended period of time, but we're now seeing price hitting the lows of the 2008 GFC. Now, if you were to scroll back a bit further on this monthly chart that way, you would find that the next level of support beneath the 2008 GFC is way longer than before this, and it actually gets down to around the 50-cent mark. So, should we break this barrier down here and end up in below the high 50s range, then there's not a lot of things in the way to stop it from falling back to where it used to be pre-2000 era. Now, other economists are already expecting to see another interest rate cut, which may affect the Australian dollar even further than what has already occurred. And most economists are still firmly short on the Aussie. Now, we're expecting to see some of these interest rate cuts. The expectation is that they might even be as soon as next month. I personally feel that it'll be a little bit longer than that. If we had a month between each interest rate cut, there really isn't enough time for them to collect the significant data and to see how effective the interest rate cut may actually be. So keep on the fingers on the trigger for that. Let's wait and see what happens over the next month or two. But I do still anticipate there being a second rate cut at some stage this year from the RBA. Looking at the news that we have ahead of ourselves for tonight, we have ADP non-farm employment change figures coming out this evening at 12:15 a.m. Now, I mentioned a bit earlier to have a look at them and take into consideration with them in your trading, especially being that we've just had a rate cut for the US. Now, I'm expecting there to be a decline in employment growth, so I would also be expecting to see that there is a negative impact from that news on the US scenario tonight, with a down move towards most of prices based on US dollar pairs. Now, the next one to look at is at 2 a.m., which is obviously a little bit later on after the ADP employment, is that the Bank of Canada is set to make a monetary policy statement and a cash rate announcement. Now, most economists have the expectation that there's going to be a cut of 25 basis points. We've seen Australia cut by 25, we've seen America cut by 50, and now we're expecting Canada to cut by 25 tonight, signifying that central banks are trying to work together a little bit in helping the economy out of this struggling sort of situation. So, considering that the idea and the similarities between Australia and the Canadian economies, I feel that it's likely that it will follow suit, and the expectation is of that 25 basis point cut to go down to 1.5%. Now, if you have any other considerations, or you would like to send an email to me about any of the content that we've done in the past, then feel free to send an email to me at talktoal@acy.com. And of course, like and subscribe the video to get more great content from us in the future. Good luck with your trading tonight.